This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
State of play. Some of the parts, yeah. You've actually done some of the parts and evaluation. I'm looking forward. I know you did this before, where you actually gave a bit of evaluation. So I'm looking forward to that. But generally, how are you? How's your week been?
It's been very good, thanks. Yep, up and down to London yesterday, which was nice to get out, and yes, but it's been a slightly busy week than last week, and things have picked up a bit. But once again, it's just flown past. I can't believe we're sitting here on a Friday morning, and the weekend is looming, which is always a good thing.
Indeed, yeah, it is a good thing. It is a good thing. Okay, well, which company do you want to take us through first?
Well, let's go through Power Metal.
Okay.
I think this is it's a really interesting way to analyze and look at the stock, because I'm sure you've seen that there's a very active Telegram group. There are very active threads on London Southeast, ADVFN, and other places, all debating, why are Power Metal shares so low? Why aren't they? Where should the valuation be? Well, the thing is, you can look at it in many ways. What I'm not going to do is to go through each project in detail. I'm going to just discuss the outline project and what it entails. But what I've done in each case is drawn a comparison with either a listed company or something that's very close that we can draw some parallels with and gain an idea on valuation that way. And I think that's the best way, because Power Metal is it's a combination of many different projects, and also, of course, is spinning off companies. The first wasn't so much a spin-off, but of course they had and still hold a stake, a 28.1% stake in First Class Metals, and of course that was hugely successful last year. And there were some warrants with that too, so there'll be a lot of value in that. But I've based in each case the valuation on the actual market capitalization at the time. So that's as we speak today. So of course this will go up and down a bit, but it's also worth noting that last time I did this, the valuation of Blue Sky Uranium, which is a TSX listed company, was much higher than it is today. In fact, it was actually twice as high last time around. So of course it's on the Canadian Venture Exchange, and since we spoke last time, the share price has come down all the way down from, I think it was 26 cents down to 12 cents. So of course the valuation is much lower. And I think what that tells us is that, of course, you might be, as a power investor, bemoaning the fact that the share price has fallen. But the reason the share price has fallen is because the share prices of companies or in its peer group or with projects similar to some of those that Power Metal operates have fallen as well. So it's important to understand that and understand the dynamics behind it. But what I'm going to hopefully demonstrate today is that even with those falls by peer group companies, Power Metal is now way undervalued where it should be in a depressed market with comparative valuations. So I'm now going to go through each of those valuations or each of the projects first of all, and draw parallels with valuations. So as I speak, Power Metal shares are at a low. They're at 1.05 pence. Of course, they have been as high as 1.85 on the year, and they dipped under a penny as well to 0.77p, and that of course was in July last year. So firstly, of course, Paul and the team have amassed a series of 16 properties at the Athabasca uranium project, and this is within the Athabasca basin, but also surrounding the basin too. And this is a uranium-rich territory And of course, Canada itself is this virtually limitless expanse of mineral-rich territory that, of course, with it offers a veritable field day for geologists getting out there onto the ground and looking at what's underneath the ground, and in some cases right on top of the ground in front of them. So with the collection of properties it has there, some are exploration stage with T-Bolt Lake, for example. They've already done sampling there. We have over 10 meters at 1.09% uranium. Cook Lake grab samples have revealed 3.54% uranium in those samples. And Tate Hill, which is sampled, revealed it had 13,200 parts per billion uranium. So this is a fertile territory. Those 16 properties cover getting on for 1,000 square kilometers, and Power Metal owns all of those assets together. So we then look at the comparative here, which directly for me is Blue Sky Uranium. Blue Sky Uranium, as I pointed out, is a Canadian venture exchange listed company. The share price there is currently at 0.12 Canadian cents, giving it a market capitalization of 26 million Canadian, or 16 million pounds sterling in total. Now, Blue Sky Uranium's territory is focused in Argentina, and the properties in Argentina include the Amarillo Grande, the Sierra Colonos, the Tierras Colorados, and Cerro Pava. And that collective together covers more than 4,500 square kilometers. So in order to acquire a comparison, I previously spoke, the market capitalization of Blue Sky was $43 million, or 27 million sterling. So based on 16 million, if we attribute a valuation of 4 million to Power Metal's Athabasca uranium properties, I feel that's a fair comparison. And of course, you can argue with me on that. That's fine. But we have to start somewhere, and I think that's a fair comparison. Secondly, we come to First Development Resources. This, of course, is a pre-IPO vehicle which raised 1.125 million in June last year in a pre-IPO funding round. I personally also took part in that too. Very excited to see what Tristan Potters and his team can bring out of the ground there. And they've also delivered some great updates, both via social media, through their work on the ground, both at Wallal, Braeside West and Ripon Hills, which of course are assets in the Patterson province, which are prospective for gold and for copper and other metals. And of course, the comparisons right there, ring very loudly with, of course, Greatland Gold's Havieron project, which is a 6.5 million ounce project that's rising all the time because, of course, they're finding more and more gold under the ground there. Then we have the Rio Tinto Winu project, and the Newcrest Telfer gold mine, which is of course of 20 million ounces, which is huge also. Then of course we have the Celta uranium project in the Northern Territories, and of course we have there the comparative company Arafura Resources, which is ASX listed. There's something like 56 million tons, a JORC resource of 56 million tons at 2.6% total rare earth oxide and 11% phosphate. So based on that comparison, you've got to sort of look at where FDR will come to market. But I do know that the estimate or the aim to get this company to market will be between 7 to 9 million. So working on the basis of 8 million, and the fact that Power Metal has a 58.59% stake equates to 4.68 million valuation on FDR. Then we come to the next IPO, which is Gold Metal, and this is probably going to be the first one to go after First Class Metals, which I'll come to shortly. Gold Metal, of course, is the Pilot Mountain project in Nevada. This is based on it's close to the Walker Lane Gold Belt in Nevada, which is the prolific area for mining, exploration, and production. The Pilot Mountain project has a JORC resource estimate of 12.53 million tons of tungsten at 0.27%. Also within Gold Metal, we have the Golconda gold and silver project, the Garfield gold and copper project, and the Stonewall gold and silver project too. I, of course, interviewed the chief exec, Oliver Friesen, there last year. They raised 750,000 just over a year ago. The IPO is expected to come in at around 7.75 million, similar to FDR. Power Metal, of course, will have a 60% holding in the company post the IPO, which equates to 4.65 million. So you can see where I'm going with this in terms of valuation. We then come to, and by the way, if you go to the Power Metal website and look under projects, you'll see all of this information laid out. Not the valuation, of course. This is my own valuation, but you'll see, you can study each project in more detail. We then come to the Heneti project in Tanzania. Now, Heneti is 35% owned by Power Metal, and this is, of course, a joint venture with Katoro Gold. And fair to say the share price in Katoro Gold has collapsed recently. So any valuation is a moot point. But this is a nickel, copper, and platinum group metals project, both at Mwaka and Mahanza Till targets in Tanzania. So Power Metal has a 35% stake in Katoro Gold. So its holding in that area is through the shares in the company. So I've attributed a measly valuation to this. However, if you want indications of valuation, of course, Mark, we spoke about Marula Mining last week. Marula have just bought into several projects in Tanzania. The Kanusi Copper Project, where they paid $550,000 for a 75% stake, and the Bagamoyo Graphite Project. Now, if you look at Tanzania, the Mwaka and Mahanza Hill targets are in the centre. Just south of there, probably a couple of hundred kilometres, is the Kanusi Copper Project, and to the east on the coast is the Bagamoyo Graphite Project. So that gives you some idea there. But anyway, this is conservatively attributing a valuation of 100,000 to Heneti, simply based on the fact that the holding is through Katoro Gold shares. So we then come to the next asset, which is Iron Battery Resources, where again Paul Johnson and the team have packaged 3 assets in Canada. Now we have the Orthia North Lithium Project, which is next to the Sayonara Mining lithium project and mine. We have the Northwind Lithium Project, also Northern Ontario, and the Dirksen Bay Graphite Project, which is in Saskatchewan, and there are 5 graphite occurrences registered on the SMDI, better known as the Saskatchewan Mineral Deposit Index. Power Metal holds 100% of Iron Battery Resources. So let's get a comparison here. So, of course, lithium is hugely important today, as is graphite. They're all battery components. Sayonara Mining is an ASX-listed company with a valuation of 1.2 billion, 2 billion Australian dollars. Now, the Orthia has a measured, or Sayonara's own Orthia project has a measured and indicated resource of 17.18 million tonnes at 0.55 lithium cutoff, and with an inferred resource of 20.94 million tonnes, again at a 1% cutoff. So, how do we draw out a valuation from that? Sayonara's main asset is in Northern Lithium, which of course is its flagship, North American Lithium. It's his flagship mine, which is just south of Orthia, and of course where the Iron Battery Resource assets are contained. So the valuation of Sayonara is predominantly represented by North American Lithium, because it's a producing mine. But taking that aside, against the other, there are another group of projects. So there are 8 projects and sub-projects in total. Orthia is probably the main one that comes after North American Lithium. So I think we can attribute a valuation of probably 500 to 600 million Australian dollars to that. In which case we'd have to say if we were to attribute a nominal valuation to Iron Battery Resources, we could attribute a very conservative 10 million sterling. Now, that could be argued up or down, but I think that's probably a fair benchmark on which to make that comparison. So we then move back to Botswana. We have the Malopo Farmers project, and of course, Power Metal owns 87.7% of the Malopo Farmers project. So this is, of course, the Kalahari key minerals exploration, where they've identified a large nickel and platinum group metals model. Of course, the first drill bit went down and struck nickel, and from that, lots of modelling has been done. We've had the famous jelly bean conductor, and this is the Malopo Farms project covers a huge area, some 1,700 plus square kilometres in southwestern Botswana. So how do we draw a comparison here? Who's got similar projects in the area? Well, we then go back, I think, to draw a comparison there, we have to use Kavango Resources. Kavango have a similar project in the Kalahari Suture Zone, the KSZ. As of this morning, Kavango's market cap was about 6.5 million. So if we attribute a valuation of 3 million to the Kalahari Suture Zone, then on a similar basis, attributing a similar valuation to the Malopo Farms project, you could argue Malopo Farms is further ahead, or you could argue the Kalahari Suture Zone is further ahead in evolution. Either way, the valuation is there or thereabouts. So I've attributed a valuation of 2.63 million based on Power Metal's 87.7% holding. So off to Australia, the New Ballarat Gold Company, 19 licenses in Victoria, 17 of which have been granted, including the Baringa gold mine. And of course, drilling has started at Baringa. That started late last year. We're getting results from there early in 2023. Now, historically, the Baringa gold mine produced some 293,000 plus ounces of gold. Also, of course, the Ballarat gold mine is nearby, and Ballarat is producing currently some 40,000 ounces of gold per annum. So in order to draw a comparison here, of course, not forgetting the New Ballarat Gold Company is a 50-50 joint venture, when in fact it's just over 50% in the case of Red Rock Resources and 49.9% Power Metal. So the comparisons have got to be with ECR Minerals, that's operating projects in the same area, in exactly the same area, in fact, just north of Ballarat, with the Creswick Gold Project and, of course, the Bayliston Gold Project. The company, ECR, are about to start drilling at Creswick, where, of course, they pull some exceptional gold grades out of the ground there. So if we look at ECR's valuation of 7.5 million at the moment, we take out the Queensland assets, probably where Creswick is at now with the Bayliston project and also the Tambo gold license, you've probably got a collective valuation of about 5 million sterling there. So if we attribute that, because New Ballarat Gold Company owns more licenses in Victoria than ECR does, so probably a fair comparison there is to equate the license value that ECR has with New Ballarat Gold Company's total valuation. So given Power Metal owns half of that, that's an evaluation there to Power Metal of 2.5 million at this present time. So still in Australia, we have the New Horizon Company. And New Horizon is, of course, a new energy company focused on assets in Queensland. And those are the Gregory River, Fiery Creek, Dynamite, Copper Creek, and Bortelek assets. These are all based on the Mount Isa copper belt. And of course, that's a famous producing copper belt, many mines operating there. And also owned by New Horizon is the project in southern Australia, which is the Willan project in the middle of the Gawler Craton, which again is a famous copper producing region. So looking for a company that we can draw a comparison with, Larvetto Resources is listed on the ASX. LRV is the EPIC code there. Currently has a market capitalization of 13.3 Australian dollars. That's in sterling terms, 7.5 million market cap. And they have assets, exploration assets on the Mount Isa copper belt. So if we look at that as a valuation, and we take New Horizon, given that it's not yet listed as an entity, and the Gawler Creighton asset, and we lump that together, I think we could probably say that that asset, the New Horizon assets, are worth 7.5 million based on that comparison. And again, of course, that could be argued either way. We then come to first class metals, back to Canada. Of course, the Schreiber Hemlo Gold Belt. We no need to introduce first class metals. Mark Sale, James Knowles, and the team have done a fantastic job in bringing it to market, and of course had a fantastic run, much against the form of peer group companies last year, but it's done very well. Currently got a valuation of 8.89 million. Parametal holds 28.19%, including warrants on top of that, but of course we won't value the warrants. So that equates to 2.5 million valuation, or of a 2.5 million valuation holding that Parametal can easily access at any time, of course, being a listed entity in first class metal. We then come to Canada, staying in Canada, we have the Silver Peak silver project. This is a series of mineral claims, which includes the Eureka Victoria silver mine in British Columbia. And this is prospective, of course, for silver, also zinc, copper, and lead. Parametal holds 30% of this asset. Trying to get a comparison with a silver company listed there. Canasil Resources, a TSXV listed company, has a market capitalization of just 3.4 million Canadian dollars at present, which is 2 million sterling. So if we attribute a 30% valuation there, that would probably put Parametal's Silver Peak valuation at about 600,000 sterling. So again, that could be up or down either way. Back to Botswana, and of course we have the Tati project, which is 100% owned by Parametal. 2 drilling programs have been undertaken on the Tati Greenstone Belt. So far, 3 million. We've extracted 5.17 grams per ton of gold over 3 meters, and this is across a gold-bearing system. So again, where do we compare? Probably go back to ECR's valuation again with its gold assets, where it's at, having drilled the assets and drilling them again now. So attributing on that basis a 5 million valuation to the Tati Greenstone Belt gold assets. And then finally, we're still in Botswana. Of course, we have the Kanye Resources asset, which Parametal sold back to Kavango, but it has shares in Kavango from that transaction, plus some warrants, but I've not valued the warrants at all because until they're executed, then of course we can't attribute a valuation. But the deal was done, and Kavango shares would issued at 2p worth 1.2 million. So given that Kavango shares, as we speak, are 1.13p, that attributes a valuation of 678,000 to Parametal stake in Kanye. So we total those together, we have a total valuation. And remember, this is based on current valuations, not valuations from a year ago, when, in the case of Blue Sky Uranium, the valuation was double, as it was with most other companies. But it's based on those really downtrodden valuations at present. I've got a total here of 44.8 million. So say, round off 45 million for Parametal Resources. Now that sits, against, well, starkly for me, against a market capitalization of 18.3 million. And I think that is a massive undervaluation. It's less than half. It's incredible, really, that because Parametal has a collection of great projects and assets, that in a depressed market, taking into account depressed valuations, Parametal's valuation is still less than half. So it's undervalued again by over half. And I'm absolutely certain that Parametal will be one of the stocks that will recover more quickly and at a greater rate of knots than its peer group, simply because it is so far underwater. But anyway, I'm putting it out there: 44.8 million valuation, Parametal, sum of the parts versus the current valuation of 18.3 million. Do the math.
Okay, well, there we go. Around the world and exploration projects in 25 minutes. Well done, Alan. There's an awful lot to cover with Power Metal Resources and all the projects globally. And the comparisons you drew there, some I hadn't ever heard of before, which are quite interesting. Some of the comparators of operations in different countries that are similar to what Power are looking for. So thank you for that. Clearly, there's a lot of research gone into that. And a prediction, or let's say a fair valuation of 45 million. So yeah, more than double where we are today, which, I think does go to show or hand in hand with the current situation in the markets there, where we are actually starting to see, nearly 50% discounts on placings, So again, it comes down to really the market conditions there. But there's no sort of potential priced in there. If you had a favourable market, you could say Power would comfortably sit around there. But where's the potential? Where's the blue sky value in that as well? So probably a lot further valuation to be had above and beyond the 45 million, just as it stands, I would say.
Yeah, there's absolutely no equation on any level to the valuation of each asset. If you pick each asset apart, and when when FDR is spun off, and when gold metal is spun off, New Ballarat Gold Company, all the rest of it, then of course these valuations will be realised. But in a kind of market, a premium will be attributed to those. But not only is a premium not attributed, but the actual depressed valuation of each component company is not reflected in the Power share price. It's discounted again by over 50%.
Yeah. Well, thank you very much, Alan. That's a lot to cover there. So that covers off POW in about 25, 26 minutes. So we do have another company to talk about, which is, of course, Poolbeg Pharma, don't we?
We do indeed. Well, I just wanted to bring everyone up to date with Poolbeg because, again, this company was spun out of the old Open Orphan, which is now, of course, H Vivo. That's about a year and a half ago. And it was spun out at around the 10p mark. And we are just now starting to come back to that. So all of the potential at the spin out point was simply not factored in. And I think, again, reflects the parlor state of the markets at present. But Poolbeg Pharma's primary asset is, of course, POLB-001. That's what it was spun out for initially. And POLB-001 is a drug that's an inhibitor with potential to treat flu and to treat other diseases such as COVID. And more recently, it has an application in oncology too. But the model behind Poolbeg is what they refer to as a capital-light model, where the company and the team will develop clinical assets up to a certain point where it requires phase 2 or phase 3 testing, and at that point they will partner with a big player in the market to provide the funding and, of course, the greater resources that the bigger pharmaceutical companies have, and of course the distribution networks when the drug successfully gets through phase 3 tests and is then sold out into the market. And this is something that the team have been very successful at. Of course, Carl Friel, the chairman of the company, needs no introduction, founded Amrit Pharma, and of course that company sold and is now worth billions. And Jeremy Skillington, the biochemist who joined as chief exec at the IPO. Jeremy is a former biochemist. He joined Inflazone Biotech in 2016. That was subsequently sold to Roche Pharmaceuticals for 450 million in 2020. So there is a track record of success and a great and deep understanding of how the industry works and how to successfully bring these drugs under trial to market. So they've undertaken a number of joint ventures. They partnered with European Genomics for RNA sequencing for their respiratory virus drug. They also have undertaken joint ventures with 13 Biotech Incorporated, which 13 Biotech incorporates artificial intelligence to identify new drug targets. Anna Biotechnologies is another partnership. Anna Biotechnologies use micro and nano encapsulation technology to create and deliver oral vaccine, a platform for oral vaccines. The company has developed and taken the trials of its drugs through the year. Last year, things started to speed up. In November, a Poolbeg-led consortium won a 2.3 million euro grant to develop and pursue the growth for the drug POLB-001. This, of course, includes clinical trials where as former parent company hVivo are very successful in offering human trial technology through their trial centres in London and around the country. And of course, many global pharmaceutical companies now use them. They're the go-to place to undertake human challenge trials. So the trial for POLB-1 was undertaken, and the trial was completed in mid-November with no adverse effects. On January 23rd, the company announced that POLB-001, the data showed that POLB-001 delivered a marked reduction in systemic and localized inflammatory response versus those patients that were treated with the placebo. So effectively, with these patients that were ill with these various diseases, the drug basically worked and reduced the inflammation and reduced the condition. So of course that's a big step forward. I would imagine now the company are looking to partner to take it on to the next phase, but it means it's at a very exciting juncture for POLB-001. And also announced in January too, I mentioned oncology, was the expansion of looking and researching the effects of POLB-001 into the oncology sector. So other developments that were announced, the collaboration with 13 Biotech identified potential new candidates in the RSV, respiratory syncytial virus patients. Using artificial intelligence, they identified potential new drug candidates. And in December, the company announced further license from InsuCaps technology to use its oral delivery technology for metabolic syndrome diseases such as obesity, prediabetes, and diabetes. So Poolbeg is certainly not a one-trick pony. It has many drugs under development, and utilizing the capital-light model as each one matures and comes to a certain phase, they will seek to partner. But of course, POLB-001 is the flagship drug, and with the latest results announced at the end of January, we're seeing now, of course, a reaction in the share price. Shares popped up on the news. The first news about the completion of the trial last November dropped back again around the Christmas period, and of course have started to rise again. Even so, we are still below the IPO price, which is astonishing. So the company has a valuation now of 47.75 million. It has I think if this company were listed on the Nasdaq, you would see a valuation probably 3 to 4 times that. But that's just my personal opinion. The company does, of course, have an OTC listing in the US, but I think in terms of exposure, it may well look to seek a Nasdaq listing at a later date. But that's just my opinion. There's no news to support that, so please don't take that as gospel. However, I think Poolbeg are at a very exciting juncture now, and bearing in mind the company's strategy is to develop the drugs to a certain point, and once they're proven, then bring in a big partner to develop them to the final phase and then into distribution and sales. I think POLB-001 is probably just about at that phase now. So we could expect some very exciting developments from Poolbeg in the coming weeks and months.
Excellent. Thank you. Well, that was a much shorter analysis there of Poolbeg compared to Power, but it's always a challenge to get Power in under sort of 20 minutes, really, Alan, isn't it? There's so much going on, but a nice little update from Poolbeg there. So thank you
I think,
very much for that.
I think Poolbeg
so
let's
see how it goes,
I certainly
shall we?
think for Power Metal, go through that. I'm actually thinking of preparing this as a document and publishing it on the side. I think it's probably the best way to do this. So once that's published, then we'll get this out, and
Okay.
I'll put this out, and we'll put it out as a research, an unofficial Alan Green research note. Yeah, so people can make their own minds up.
An unofficial research note. Yeah. Okay. Indeed. Well, let us know when that goes out, Alan, because I think people would be very keen to have a read over that. But thank you very much for your time today on the Research Talks podcast, and have a pleasant weekend. And everyone else listening, I hope your weekend is going well, and we'll catch up again next week.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.